Depreciation is a tax deduction that lets a business recover the cost of certain property over time. Think wear and tear, deterioration, or obsolescence. Most tangible business assets qualify, like equipment, furniture, vehicles, and buildings. Some intangibles don't depreciate, but they still get recovered through amortization, like certain software or purchased rights. On the EA exam, they'll test whether you capitalize first, then recover through depreciation or amortization. To be depreciable, an asset has to hit a few checkpoints. You generally must own it, but you can depreciate capital improvements you make to leased property. The property must be used in a trade or business, or for producing income. It must have a determinable useful life, and that life must be more than 1 year. Miss any one of these, and depreciation is off the table. That's a classic EA exam trap. Placed in service is the timing rule that drives when depreciation starts. It's not when you pay for it, and it's not when you find a customer. It starts when the asset is ready and available for its intended use. For rentals, that can be the date it's ready to rent and you're advertising, even if no tenant has moved in yet. On the exam, ready and available beats actually used. Depreciation also depends on business use. If you use an asset partly for business and partly personally, you only depreciate the business use percentage. This shows up a lot with listed property, like passenger autos and certain camera or video equipment. If it's 60% business and 40% personal, you only get 60% of the depreciation. The IRS cares because these items are easy to abuse, so the reporting is stricter. Now the big non-depreciables. Land is never depreciable, even if it's part of a building purchase. But land improvements, like fences, paving, drainage, or roads, can be depreciated because they wear out. Inventory isn't depreciated either because it's held for sale, and purely personal use property doesn't get depreciation. Another common trick: if something has a useful life of 1 year or less, it's generally a current expense, not depreciation. For reporting, depreciation and amortization live on Form 4562. That form is also where you elect Section 179 expensing, claim bonus depreciation, and report business use details for listed property. One more exam favorite. Once you choose a depreciation method for an asset, you generally stick with it for the asset's life. Changing methods usually requires IRS permission using Form 3115, though switching to straight line is commonly allowed without advance consent. Harborview Realty Services made a $200,000 down payment on a commercial building and assumed the seller's mortgage of $120,000. They also paid $4,000 in attorney's fees for perfecting title and $20,000 for permanent improvements before placing it into service. The property tax bill values the land at $70,000. What is Harborview's basis for depreciation? The choices include $274,000, $250,000, $324,000, and $320,000. Think about it. The answer is $274,000. First, compute total cost basis. The down payment plus assumed mortgage plus title legal fees plus the permanent improvements. That's $200,000 plus $120,000 plus $4,000 plus $20,000, or $344,000. Then subtract the land value, because land is never depreciable. $344,000 minus $70,000 equals $274,000. A tempting wrong answer is $344,000, because people forget to carve out land. Which asset used in a business would not be classified as listed property by the IRS? The options are photographic equipment, video recording equipment, farming equipment, and passenger automobiles rated at 6,000 pounds or less of unloaded gross vehicle weight. Think about which one doesn't fit the IRS easy to abuse category. Think about it. The correct answer is farming equipment. Listed property generally includes passenger autos under the weight limit and items like photographic and video equipment, because they're commonly used personally. Farming equipment doesn't fall into the listed property bucket. The tempting choice is passenger automobiles, but that's actually the classic listed property example with strict substantiation rules.